Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. We appreciate you listening. If anything resonates with you today or any questions, feel free to give us a call at 612-504-8400 or visit us online at havenfinancialgroup.com, where there's all kinds of calculators, retirement tools, and of course, all of our events that we continue to put on, and they continue to be very well attended, which means people are still seeking to learn, and that's the education piece that we're focused on. And it's great to have Kyle Thomas, certified financial planner on the Haven investment team with us, Kim. A lot going on in this world, and we're going to address a lot of it today.
Yeah, there sure is. It is great to have Kyle. Glad you could be with us this morning. The world is up and down, up and down. We're on a roller coaster, and it feels like our economics are on a roller coaster as well. And that's got a lot of people a little bit nervous. So we want to talk about navigating your retirement through these economic uncertain times, which I feel like may be with us for a bit longer. Right, Larry? Do you feel the same way?
I do. Of course, a lot hinges on what happens this past week and the war, of course. But, it's just headlines after headlines of unemployment and the war and the oil prices. And, what are the economic indicators and what does it mean for me? What does it mean for my retirement, especially for those that are on the cusp of retirement? They're going, I don't know if it's a good time to retire or if I should retire. And all of these things are very common to have these questions. And that's why it's important, I think, that we just address things today that are, top of the mind with folks, put their mind at ease a little bit. This too will pass. We've seen it before. We live in the moment. So everything seems like it's crumbling. But at the end of the day, if you have a plan, and you and I talk about it every week, we can go to that plan and say, okay, we've already discussed this. And there's something to say about peace of mind.
Absolutely. And I think at the end of the show, what we hope everybody does understand is just that. If you have a plan, you can weather these economic storms. We're going to talk about the economic indicators and your retirement. Then we'll talk a little bit about financial strategies that are built for these times, important strategies to consider to mitigate market risks, because, boy, we've watched the stock market bounce all over the map. And then finally, how a financial advisor can help to keep your finances on course. So let's talk a little bit about some of these economic indicators that we are all following, and just which ones are the most important to be following and what they mean to our economy. So maybe, Kyle, you'd want to start. Let's talk a little bit about labor market data, because it's been a little bit all over the map here in 2026.
Yeah, and thanks for having me back on the show. And labor market data has it's been something that the Fed especially has been watching over the last few years here, following all the interest rate volatility since 2020 through today still. The labor market data is one of their key indicators on how they make their decisions. And it's an indicator on how the economy as a whole is doing as well. And if you think about what actually drives the economy, it's spending money when you just break it down, right? People spending money makes the economy work. Well, if people are unemployed, they have less money to spend money. So when we have higher unemployment, that puts a little pressure on the economy as a whole, and it can cause a little worry, within the economy itself, but also the stock market, which we're very familiar with over here as well. But reports recently have showed that unemployment increased to 4.4%. So obviously, it shows a cooling job market. These companies are adjusting to higher operational costs from geopolitical factors around the world that we all are pretty aware of right now too. So it's affecting the bottom line for a bunch of these companies. And, those energy prices, which are causing those companies to adjust to the, those higher costs. Oil reached $120 per barrel last month. So it affects
up from
everything.
60 before the war. Right.
Right. So it all boils down to, what's happening in the world and the day-to-day things of life, getting around in your car, that has an impact on you. It has an impact on the companies that are transporting goods to their warehouses. So all the costs go up. Companies have to adjust to that. Sometimes they have to lay people off.
Mm-hmm. Yeah. Inflation indicators, they are still high as well. Of course, all of this is playing into one another. These are all indicators, as we mentioned, economic indicators, and they're all sort of rolling together. So we're seeing fluctuation in, as you said, the labor market, energy prices, and now inflation indicators, where they remain high. Talk to us a little bit about that, Kyle.
Yeah, and so inflation and the unemployment rate, those are the two, pieces that the Fed focuses on. So in inflation, the Fed's been trying to get to 2% on inflation for a while now before they really start to lower those rates that they're setting. We haven't gotten there. We've kind of been stuck around that 3% rate for, a couple of years now, it feels like. So, and right now, the latest numbers that came out, we were about 3.16 for our inflation. They want that to go down to 2, like I said, and until we get there, or until we get a new Fed chair that changes, the kind of the policy of the Fed, we're probably not going to see too drastic of rate cuts. There's actually been some potential talk of rate increases, and it all is dependent on what happens with the global affairs right now. If oil stays up, then we could have higher potential for a rate increase. And the last time we had rates increase was 2022, and that caused some panic in the markets for stocks and bonds. Sure. But if rates come down, that'd be great for the economy and the stock market. Companies like lower costs, so that would definitely help the consumer as well. So the inflation piece, long term, we don't want it to be at 3.16. We want that to be closer to that 2%. You do want some inflation because, again, that's what drives the economy. But we want it to be a little lower.
Yeah. The real estate market has, you want to talk about a part of the economy that has really been bouncing all over. Real estate market, of course, driven sometimes by some of those interest rates. It's not a direct correlation, but it does ultimately have an effect on the dollars that we are borrowing for purchasing real estate, and mortgage rates have gone up. They're like 6.5, which is high as compared to where they were just maybe 4 months ago. Where do you see that going, Kyle? And what kind of impact does that have on our retirees, for example?
Mm-hmm. Yeah, I could see mortgage rates following a similar line to what the Fed does with their interest rates. Mm-hmm. They're not a direct correlation, but they're pretty closely and tight knit to each other. And when those rates go up, it deters people from wanting to take out new mortgages on these houses. So you could definitely see a slowdown in the housing real estate market, specifically for retirees. We have a lot of people that want to downsize. They live in their home that they've raised their family in, and now they want to go from a 2-story to a rambler for the rest of their life for living. But you're going from a refinanced rate, which is anywhere from 2 to 3%, but now you have to finance that at 6.5. Mm-hmm. So the people who can kind of get away with that without being impacted by this are people who could pay outright for that new home, if they don't have a mortgage remaining on their current house. But it can really impact retirees because now if you take out a new mortgage at 6.5%, what does that do to your cash flow? Do we have to increase your spending now for the rest of your life? And how does that impact your financial plan for the future? So that's why we got to make sure that we put a financial plan together from the first step we take.
Absolutely. Well, and of course, when we see these go up, just as you have just explained, what happens is then people stop putting their homes on the market. So even if you sell that family home, a lot of people don't have anywhere to go, much less the idea that they'd have to take out a mortgage at a higher rate. We were talking about economic indicators. I guess, Larry, the most important thing here as it relates to a retiree is what?
Well, that's why we are focused at Haven in holistic retirement planning, the all-encompassing plan, not just the money, but all those retirement puzzle pieces. Because, riding out the market volatility, it requires patience. But the plan, it comes back to the plan. Do you have a partner in your corner that's put together a plan specifically to you? And we'll probably talk later, not cookie cutter, but designed to your needs, to your timeline, to your goals, wishes, wants. That's what's important, because if you have that, you can ride out these times. You can have the confidence that you should have. But if you're not getting the attention from who you're working with or in paying, that can cause some real problems. So if you don't know the position you're in and you're listening today, and thanks for listening, reach out to us, whether today or this week or whenever it is. Sit down with us. There's no cost to have a discovery meeting. You get to know us. We get to know you. We get to talk through some of these concerns that you maybe have, and maybe whoever you're working with isn't listening. I find that sometimes people like to talk more than they like to listen, and they're not hearing what you're saying. We want the confidence. You should have the confidence, and we'd love to visit with you.
612-504-8400. That's how you reach the folks at Haven Financial Group. And as Larry just said, give them a call and set up an appointment, discovery meeting, if you will. 612-504-8400 if you're looking for a partner. When we come back, financial strategies built for various economic environments. You are listening to the Haven Financial Group radio show.